Welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends, and most importantly, your queries during the course of the show. So please keep commenting on our live feed and we'll have your questions addressed by our technical expert later on in the show. But before introducing our guests, let's see what the global handover looks like and what's the big news to track today. European bourses close lower as investors continue to dwell on the recessionary outlook in the region and as inflationary pressures continue to grow. Stoxx 600 ended the day 0.4% lower. Wall Street snaps losing streak with stocks closing their best day since 10th August. Asia edges higher as well, and SGX Nifty hints at a triple-digit up move. Meanwhile, oil slides to 7-month low amid demand fears. Stocks in the spotlight today will be InterGlobe Aviation once again, Blue Star, Zydus Lifesciences and Capacite infrastructures. Cement stocks have been plastering solid gains despite loss for broader indices. What is aiding the resilience we discuss as well. All right, let's take it across to my first guest for the day. Mangesh from Nirmal Bang joins us to talk about the cement sector, what's the key triggers there and what's the outlook as well. Mangesh, thanks for joining in. Talk to us about the rally and the resilience that we're seeing in the cement space. We were given to understand that cement companies have hiked prices between 15 to 20 rupees a bag in the western and eastern markets. But other than that, what is it that's sort of giving confidence to investors?
Good morning and thanks for having me on your show. So there are, I think, three factors that are contributing to the rally in cement stocks. The first is a couple of days back, we saw CCI report being delayed by almost 2 months. So the cement companies have sought time to reply to the CCI report. And that was a big overhang on the stocks wherein a lot of investors were expecting large penalties being laid on the cement companies and that could come out anytime. So now that cement companies have sought more time and then after that, I think CCI will take its time to release it and take it to the next level. So at least for the next 2 to 3 months, that is out of the question. Second is petcoke as well as coal prices, specifically petcoke have been coming down. And we have seen that in the month of September, first week, we saw almost 3,000 rupees decline in petcoke cost, which comes as a big relief to the sector again. And third thing being, most of the companies are trying to improve on the prices. So we have seen at least 10 to 15 rupees hike across most of the regions. And this is the confluence that came together and that's what has led to the rally. Now, if you look at the past 6 months, we have seen multiple or a series of negative news for the sector in terms of demand being lower, the operating cost being higher because of coal and petcoke, and even crude was higher. And now slowly that cycle is reversing and we are starting, seeing that most of the negative news are actually turning out into a positive news now with cost coming down and with monsoon receding, demand expected to pick up. So I think probably for the next few months, we could see a clean rally in cement.
Okay, well, that's heartening to know. But let's talk about, a big development that has happened in the cement space, which is Adani Cement's acquisition in ACC and Ambuja, and that's seen as a big trigger as well. So going forward, what is the kind of consolidation or changes do you, foresee in the segment? Of course, post the takeover, Adani will be the, one of the largest players in the space. But apart from that, what kind of changes do you foresee?
So this acquisition of ACC and Ambuja by Adani is not a step of consolidation because this is just a change in hands. So one player going out and one player is coming in. So, going forward, what is going to happen is that Adani will have exposure to a lot of assets and they have exposure to a very vast capital. If you look at most of their other companies, they tend to have relatively higher leverage compared to the industry. And in this case, in cement, they are getting the companies which have cash in excess of 10,000 crores. So they can leverage those balance sheets and actually gain much higher market share in a quick time. How they go about it is only time will tell because anyways they have spent good amount of of money on the acquisition, and they would want returns on it. But if they become aggressive in acquiring capacities or probably going ahead with undue or the assets which are not fit, then they might come into a problem. So that's why I think they would be prudent. They would be prudent in selecting the assets, and they might even do the brownfield expansion, though it remains to be seen, but very difficult. In terms of industry, we believe that this is a large player who's coming in and actually pose a serious competition to be a large number 2 player. Because of that, the capacity addition will pick up pace, and even the incumbent players will also try to offset this impact of competition by adding more capacity themselves. So 2 years down the line, we might see that there would be an excess supply situation in the market, but it all depends on how the larger ones handle the situation through either consolidation or through discipline.
But certain people on the street and even brokerages are of the view that post this acquisition, post Adani's foray into the cement space, the entire sector looks poised for a re-rating. Could that be true? Do you concur with that view?
Yeah, so my earlier view was that it could actually lead to oversupply situation. But after having spoken to multiple companies or managements over the past month, more or less the view is that they are currently the assets that they have are operating at full utilization. Even if they are aggressive in building capacity, that's going to take them at least 2 years for those capacities to start contributing. And if they actually go for further acquisition, then that would lead to consolidation. Now, if you look at most of the sectors here, even ACC Ambuja for that matter, they are relatively lower compared to their all-time highs on EV EBITDA as well as EV per metric ton levels. Many stocks within the sectors are trading below their replacement cost. So there could be, because of the interest of the group in lower market cap curve companies, we could see valuations moving up, and for the larger ones, because of expected profitability improvement over the longer term, we could see some uptake there. But I think the impact would be more on the smaller ones, which are actually trading below replacement cost.
Okay. Any of the downside risks that investors should also be prepared for if things don't go as per expectations?
So I think demand is the key. If the demand picks up and goes at around 7 to 8% or even 9% growth rate, then the pricing will not come under pressure irrespective of the supply that is coming in. But if demand surprises negatively, then even pricing as well as irrespective of the cost coming down, the pricing or competition intensity in the market will increase substantially, and that could have a negative impact on margins. So demand is something that we are keenly watching. There are expectations that because next year could be a pre-election year, we could see a lot of spending happening as early as the second half of this year. If this doesn't fructify, or there are other aspects of demand which actually like urban housing or some parts of infrastructure which slow down and take the overall demand down, then that could be a negative and that needs to be watched out.
Okay. All right, Mangesh, thank you so much for taking time out and chatting with us about what's happening in the cement space and some triggers as well as potential risks to watch out for. Let's get going and talk technicals as well. Chandan Taparia joins us from Motilal Oswal. Morning, Chandan. Expiry day for the week. Talk to us about the cues that you're getting and what should investors be ready for.
Good morning, Karunya. So talking about Nifty, we are moving in a range from last 5 to 6 trading session, where support near to 17,442 are being bought, but we have multiple hurdle near to 17,777. What we notice in last few days, whenever we see the gap down opening, market somehow managed to hold the support and turn higher. But whenever we see gap up opening, market fails to get the momentum. So now 17,777 will be the key level. We require market to head that level to commence the next leg of rally. But as of now, looking at the previous day closing and the positive trigger from the global market for some recovery, we believe that 17,442 could act as a major support to move towards 17,777 and 18,000 zone. And what I believe that for next couple of days, market require consolidation at this band. And if that happens, the next leg of rally cannot be ruled out for the firecracker towards Diwali. and in that scenario, we can even head towards 18,500 level. But as of now, total focus is near to 17,770 level in the Nifty index for the expiry day point of view.
Yeah, and looks like we're, slowly crawling back to those levels we saw around Diwali last year, 18,500, keeping our fingers crossed. But I was just talking to another analyst before you from Nirmal Bang, and we were talking about the cement sector. And talk to us about the technicals, how they're looking. Yesterday, of course, was a phenomenal day. We had, Ultratech, Shree Cement. They were among the top Nifty gainers. And this was at a time when the overall breadth of the market was not very strong. So will that uptick continue? And do you have any favorites from the cement pack?
Yeah, we have seen good run up in the cement counter, especially in last two trading session. Good attraction with volumes and open interest activity started to notice. Even I have noticed that selective option strike also getting good attraction and accumulation in OI activities. So yes, we have positive stance in SEC, Ambuja, India Cement, Ultratech Cement. So among all, I look for SEC, and this stock has given a consolidation breakout by surpassing the immediate hurdle of 2350, 2365 zone. So I believe that now 2350 could act as a support to extend the move towards 2450 to 2520 kind of level. Even if you look at the other name like Ultratech Cement, they're also done well and given a consolidation breakout. Technically speaking, it is completing a pole and flake kind of formation on the weekly scale. And a small follow-up beyond 6800 can take it to a 7200 to 7500 level. So would prefer to go long on SEC, Ambuja and Ultratech Cement in the cement space, and still believe that already they have seen good momentum in last two trading sessions. Further 3 to 5% run-up can be seen in most of the cement counters.
Okay, all right. Let's move on and talk about some more stocks that could be buzzing in trade today. The first one is once again Indigo, which is InterGlobe Aviation. What we're giving to understand is that Rakesh Gangwal, who's one of the promoters of the company, co-founders of the company, and his family are looking to hive off 2.8% stake in the company via a block deal. 10.8 million shares have been listed for sale to fetch an amount of close to 2,000 crore rupees. On back of this, yesterday we already saw the stock sulk a fair bit in the trading session. Would that downtrend continue today on back of this development, or do you see some, bounce back?
Actually, this stock is consolidating in a range from last 20 trading session. Whenever it goes near to 1930 marks, it witnesses buying. But at the same time, it takes so much effort to move beyond 2080 or 2100 zone. So multiple times supply is clearly visible near to 2100. So right now, from last 20 days, is moving in between 2930 to 2100 levels, and now we are in between the trading range. So technically speaking, it requires this range breakout, then only we'll understand about fresh leg of rally. But as of now, the way it has fallen down yesterday, even if today it continues the selling and comes near to support of 1932, then one can look for some buying activity. But if you ask about major trigger, that will only come about 2100, and in that scenario, the rally could be seen towards 2300. But as of now, play with this range with support near to 1900, 1930, and keeping in mind near to hurdle of 2050 to 2100 marks.
Okay. The next stock we want to discuss is Capacity Infra projects. Newquest Asia has sold about close to 2.5% stake in the company, rather 16 lakh shares in fact. And the stake that they held in the company is down from 9.8% before to now at 7.4%. So some, fund action happening here as well. Talk to us about the technicals of Capacity.
Yeah, so when you're talking about Capacite company, this is the counter which is known FNO. If I look at the yearly chart first, in last 4 years, the stock was falling down. If I look at the entire price history, corrected from 437 to recent high of 98 levels. But now it is finding some sort of attraction, even if I look at the monthly chart or the weekly chart. And from last 5 weeks, it is making higher rise, higher low. So I think 172 could act as a major support to drive the move towards 200 kind of levels.
Okay. Moving on, there's another bulk deal that I want to flag off. SBI funds have bought 0.3% stake in Blue Star via open market. So post this transaction, earlier they held 7.2% in the company, and now the holding has gone up to 7.5%. So Blue Star, decent up move seen yesterday. Is that trajectory going to continue? How are the technicals placed?
Yeah, so but this is a positive to range bound stocks. We never see bigger movement in the counter, but slow and steady, this stock really do well. Overall, we believe that slow and steady is going to head towards the multiple months high level. So as of now, the 1225 is the lifetime high of the stocks, and we are just 8-10% down from the same. And recently, last few weeks, it recovered well from 850 to almost now near to 1130-40 marks. So I believe that multiple support is near to 1085. So with the support of 1085, it can head towards 1180 to 1225 levels.
Okay, well, that's the word coming in on Blue Star. How about Zydus Lifesciences? They've achieved positive proof of concept in phase 2 clinical study for a drug that is used for treating CAPS, which is a auto-inflammatory condition. But positive development coming in here as well for Zydus Life. How's the stock looking?
Yeah, so when you talk about pharma, I'll talk about Cipla also, which is major support near to 1030, giving the consolidation breakout of last 20 trading session. And talking about Zydus, in your reply, this stock has been consolidating the range. If I look at the yearly chart, in this year is down by around 22%. If I look at the weekly chart, then I'm getting some relief after the decline of last 3 weeks. Earlier, it gave the breakout about 375 marks, but that breakout was not sustainable. And recently, it has corrected from around 400 marks to 365 level, forming the bottom on the lower time frame. So I believe that because of the price behavior, we see some bounce back. So 365 could provide a support for a bounce to us 390, 395 level in the Zydus lab.
Okay. Let's start addressing some of our viewers' comments and queries as well. The first question I want to bring up, since we're talking about pharma and healthcare, let's talk about Apollo Hospitals. Shyam Rao has sent us a comment and he wants your view there. Now, this one has recovered a fair bit from its recent lows of, 4,000 rupee levels, adding about 350 bucks on the upside. Is that trajectory sustainable?
Actually, if you notice the price behavior, we have seen good run up in Apollo Hospital, especially in the 2020 and majorly in 2021. So last 2 years were amazing at the COVID time of when the old such kind of sector were doing well. So in that scenario of last 2 years, the stock is rallied from 1,000 to almost nearly 5,900 level. But now that momentum is not there. So that is the reason that nowadays we are not picking much about this stock. But the good part is that after the good run up of last 2 years, some sort of consolidation could be seen. And if I look at the weekly setup, this stock is trying to form the rounding formation. And if someone is looking for intraday point of view, 42.30, 42.50 is the major support, and hurdles are there near to 4,600. So we believe that this is likely to be in this broader trading range. Some sort of more consolidation could happen, and then you will see the next leg of rally and momentum in the counter.
All right. Okay. The next query then is from Saish, and he wants your view on two stocks, Tata Power and Z Entertainment. Now, Tata Power, again, good uptake last 1 month, whereas Z has been a range-bound sort of a move. So what's your verdict on both of them?
Yes, so first, let me talk about Tata Power. So Tata Power has recently given a breakout about 238 levels. And then on Tuesday, it ran well by 5%. Yesterday, it formed a dozy candle, but major trend remained intact on the weekly chart. And on weekly basis, we are giving the breakouts of 17% in this counter when I talk about Tata Power. So 17-week long consolidation breakout with decisive hold about 238, 248 attracts the fresh uptick. So I think with support of 241 or 240, one can play the momentum towards 255, 260 level. I think the next counter was Z. So media stocks are again on focus. However, one need to understand these stocks have different nature. Suddenly they get the momentum, then momentum fizzle out, they consolidate, again it starts the next leg of rally. But yesterday they have Z has done well, rallied by around 5%. But concern is you are in a broader trading range. If I look at the price movement of last 10-20 trading session, it has been moving in between 240 to 270 levels. So that is the bound range of now. And as it surpassed the immediate hurdle of 255, once it can again attempt to the recent swing high hurdle of near to 269, 270 marks.
Okay, all right. Moving on then to the next viewer query. Arun Srinivas has sent us some details about his investment in IEX. He has 100 shares, which he bought at 184 rupees a piece. Wants to know whether he should hold or exit.
So, like when you talk about power companies, recently we have seen good run up in counter like Tata Power, NTPC. Even if you look at the coal, also the Coal India also it started to witness buying interest. But IX, which really done well in the last year, really from 68 to 318, lost all its momentum recently. Even if I look at the weekly chart, I am clearly seeing the price formation of lower top, lower bottom. In monthly chart also, there is no resilience in the buying interest. So I'm not aggressive over here. If someone is holding, I cannot say what to exit now. But yes, better not to average much. Let the stock surpass above 170 kind of zone, then only the fresh log rally can be assumed. But as of now, better to play with the range of 150 to 170 level in the counter.
Okay, all right. Next question coming in is from Anurag, and he wants your advice on Avanti Feeds. It has cooled off a tad from 515 rupees levels to now, I think, sub 475 actually. What should one do at this point in time? Good level to enter, or should one stay away?
See, when you talk about Avanti Feeds, so I think here some sort of support-based buying is there. But again, need the momentum and the breakout to commence the next leg of rally. As of now, 457, 450 is the support for a bounce towards 490, 192 kind of levels.
Okay. Let's quickly address the last query for the day as well. Abhay is writing to us as we speak. He wants your view on Biocon. How do you think this one is looking? I know you've talked about Cipla being one of your top picks, but how's Biocon?
Yeah, so Karunya, what I noticed now, pharma stock started to be in limelight. Most of the people now talking about pharma after the resilience and the weakness of last many weeks. If I look at the Nifty Pharma Index, that was up by around 0.78%. And on daily chart, it is forming the bottom. On weekly chart, it is negating the lower highs, lower low sequence of last 4 or 5 weeks. So that's the reason that everyone now started to look at the pharma. But one need to understand, pharma might be providing you better risk reward ratio, but understand the strength is not that is there compared to other performing sector. So if you are looking for pharma, better to play the swing, enter in the swing, exit in the sim. That is the best strategy. We talked about Cipla as a recommendations, which is giving the breakouts. But if someone is also looking at the Biocon, need to understand major trend is in pressure. We are making lower top, lower bottom. But yesterday it formed a strong bullish candle, followed by two multiple support zone. So with the support of 291, 292, you can take a trade, and here you can hope a bounce towards 317 to 319 levels.
Okay, I hope our viewers have taken note of that. Unfortunately, that's all the time we have to address our viewers' queries. But Chandan, before we let you go, tell us what your favorite picks in the market are. I know Cipla is one, but what are the other two?
Yeah, so you understanding what the sentiment and the setup is there. So first of all, I'm talking about Nifty. 17,777 is on our radar. And you just hold the market above the same for next 1 or 2 days. You will be witnessing fresh leg of rally that we are keeping closely in mind. And any kind of position can be held with major support of 17,422. Stock specific, yes, Cipla is the first trade. We suggest to buy with support of 1,030, looking for a move towards 1,085 to 1,100 level. Coal India is other name where we are expecting some uptick. The stock is continuously making high rise, high lows on the weekly scale, given a decisive close of a multiple barrier of 235. So with support of 232, we can see a rally towards 250 level. Cement stock looks good, whether you talk about SCC, Ambuja Cement, India Cement, or Ultratech Cement. Among all, I'll prefer with the ACC. This stock has given a consolidation breakout on the weekly chart. In fact, multiple price patterns are visible at same time, including your ascending triangle, rounding formation, cup and handle. So all these multiple price breakouts with support of volumes and open interest could drive the momentum on higher side. So recommending to buy with ACC with support of 2345, looking for a move to us 2475 to 2500 level. So Coal India, Cipla, ACC, cement counters could be on radar for trade for the day and for companies.
All right, great, Chandan. Thank you so much for flagging of all of these names and for helping our viewers out. Always a pleasure to chat with you on the show. With that, we're timed out, so we're going to wrap it up right here on Morning Trade. Thank you for tuning in.